I'd like to start this video off by going on a rant about how the sentiment changes just like that when we get a couple green days in a row. Everybody starts thinking, a lot of people do at least, based on what I see from the comments that I read, they think it's such a good stock now and such a good company because we're up 3% a day and we've gone up 2 trading days in a row. I want to remind everybody what you want to actually be looking at are things like this. For example, what we're going to go over today is the substantial amount of money that we paid off in debt this last quarter that no one gave a shit about. And actually, they neglected this and focused on the slightly higher operating expenses, which was to be literally expected. However, this resulted in a lower earnings per share. And they focused on that and fixated on that, and that caused us to go down. Now we go up because, don't get it twisted, we're going up today because everything else is going up. Everything in the stock market essentially skyrocketed. You only have one red stock on my entire watch list for high growth today. The damn wolf stock, all right? It's the only one. Everything else is up a huge amount. Don't conflate the stock being good or bad or the company being good or bad with what it does on the day. That's my point that I'm trying to make here. So we have a couple new things today. We have a couple new filings. I want to go over, of course, the debt repayment that we had this quarter, the specific amount there, and going on and ranting and again extrapolating, which I have to say this a ton. We have to keep going back to this because this is the company telling us what they've been doing the last 3 months. This is quarter 2. This is how they've been doing, and I want to analyze this more and more and more thoroughly until we have found everything else, everything about this that we can. And I want to talk about today the problem with the reaction of the stock market had after the earnings and why it's completely fucking flawed. All right, also we had a little bit of marketing action going on here in a YouTube video. I'm a little bit late on that, but we're going to cover that. Only good things can come from things like this, all along with stuff like the European Society of Human Genetics. This is happening very, very soon, right around the corner, August 28th to 31st. And then if you missed it yesterday, these are the two Sapphire IFI adoptions that we have maybe here. One of them is probably not. This one right here, the BMFZ Leukemia Symposium, and then the other one is most likely completely legit, could be several. And then we're going to go over some quick technical analysis, and I'm sure we might do a little bit more ranting on the sentiment changes and the whimsical, spontaneous, arbitrary switching of liking the stock and hating the stock based on if it's green or red on the day, right? I might do a little bit more ranting on that. But starting off with the institutional ownership, almost 30%. You're looking at 81 million shares owned by institutions, 192 that are only owning shares that are we can assume, based on this, they are expecting it to go up at least long term. Come on now. And you've only got a couple institutions that are going short. Now, if we look at the recent filings that were today, you've got 3 of them, and they are all adding shares. You got another guy coming in. Remember, the transaction date is not indicative of the file date, right? Vice versa, or other way around, whatever you want to say, however you want to say it. These guys are adding shares. That's the trend that we've seen. 2 million shares added by this ETF here. And if you look at the portfolio allocation, this is actually pretty interesting because that's actually very high. That's very high. And if we actually go ahead and sort this, that is going to be the 4th highest. The S&P Kensho New Economies Composite ETF, that is going to be the freaking 5th highest in terms of portfolio allocation, and that's what you want to see. The share amount, and this is what so many people get wrong about institutional ownership. You want institutions to buy millions of shares, but it doesn't matter that much if their portfolio allocation is 0.00001. That does not even affect their portfolio change on the day, even if we go up 1,000%. Literally, that's like allocating 1 cent of your portfolio to a fractional share of something when your whole portfolio value is like $1,000 or 10,000 or 100,000. It doesn't affect it. What you want is institutions with high portfolio allocations. For example, almost 1%. Putting 1% of that portfolio in Bionano shares, that's extremely bullish because not only is that just amazing by definition, right? But also because the stage of the company where we are at a 1.5, almost 1.6, $1.7 billion market cap right now, going from almost delisted. That is not like a company. That's not a situation that most institutions consider auspicious right out the gate. So it's amazing to see that just recently today we had an amazing amazing investment here, which is 2 million shares. 2 million shares added, and let's see what the effective date is on this. I do have premium Finto. You're welcome, my friends. Let's look at that advanced data here, or premium data, I should say. So your effective date is the 30th of June, like most of them. 2 million shares, and the portfolio allocation is almost 1%, 0.70%. It's beautiful. All right, now moving on. The repayment of debt. So you're looking at it's very simple. It's very self-explanatory. In the second quarter, right? They always say ended June 30th, right? 17 million is how much we paid off in debt. Now this is important because usually we don't, right? If you just look at the other quarters here, we don't do any really, right? We pretty much do zero. Out of the two out of the last 4 quarterly earnings reports were nothing, zero in repayment, zero debt repayment going on. We just paid 17 million off. That does a lot for your total cash amount. When you go from, we had 38 million at the end of 2020, then we went to 362, then we decreased by freaking 30 million in a quarter. That's pretty huge. People did not like when they saw that. And unfortunately, people didn't realize that the big reason why we got such a bad EPS, and the big reason why that is so scary and why it shouldn't be scary, is because most of that, literally more than half of that, was going towards a debt repayment, which is a one-time thing. It's a one-time thing, man. And now, all of our debt is gone, essentially. So that is, I want everybody to know that from a balance sheet perspective, from a financial perspective, in my opinion, right, you do your own damn Warren Buffett net income and all the other calculations that Warren Buffett does. Okay, the capital expenditure, go do all those calculations if you want to. I'm not doing that. I'm looking at this and saying this company has the cash they need to get their SAVR system out there and do the marketing and the presentations and the clinical trials, SAVR 2.0 development, all the stuff that they're doing, the reimbursement, path to reimbursements, avoiding and bypassing and solving the FDA approval dilemma. They have the cash to do that. They have the business model to support profitability happening in a couple of years. The balance sheet gives us an auspicious opportunity to effectuate the company's goal, quote, of global SAVR adoption. That's as simple as it gets. You won't find it getting much simpler than that. Go research the consumable revenue and the business model of Bionano. You'll see what I'm talking about more. We'll rant on that more in the future. Now connecting the dots here. So we've established that the $17 million in debt happened in quarter 2. If you look here, the operating expenses was 17.9 million this second quarter. 12 million was the first quarter. That's another reason why everybody was freaking out. This is not including the debt repayment, right? Operating expenses, that's not including the $17 million debt repayment. Most of this increase, right, it's 18 million compared to 12 million in quarter 1. That was because of these two things. I'm not going to read them. I've said them several times for you. You can look at those on your own and pause it right now if you want. But I just wanted to make the point. We went down, and remind everybody, we went down after the last earnings report, man. We went down because of this. It's the most egregious thing. It's appalling. It's really appalling. And I'm hoping that the market is going to rectify this by having Bionano outperform if high growth is going to get a rally in these next few days, or if this is dead cat bounce, right? That could totally happen too. But if we're going to rally, I would love to see us outperform, because I think if people take a second look at this and digest more and reflect on this process a little bit more, they'll realize that we did pay $17 million off in debt. Our gross margins increased. Our gross profit was looking great. Our SAVRs installed, great. There's great things coming. Reimbursements. We got the clinical trials. We got the SAVR 2.0. You got a ton of things going well. And the company, from all of our, from every single thing that we can look at, the company looks fucking awesome. The company looks great, man. I mean, look at that. Okay, this is all you need to know. I mean, this isn't all you need to know, but if you know the SAVR, if you know what the SAVR is, and you look at these numbers here, all the milestones are on track. You got $330 million in cash. You're making crazy year-over-year numbers, man. The earnings report was good, and we went down. We went down because of it, man. The EPS, we got a small miss, which literally we already have gone over why it was a miss. Okay, the one-time expenses, which was the debt repayment, and these two things right here. They literally say it right here. I mean, these are essentially both of these. At least this thing right here is a one-time payment. Okay, they're not going to be doing this perpetually. That's not something that's going to be perennially going on. No, absolutely not. So without saying anything else, your ape language in conclusion, why we did all that ranting was to establish that the market's reaction of Bionano's earnings report in quarter 2 was horrible, right? We literally went down because of this, when in reality we should have gone up. We should have gone up a fair amount, in my opinion. I think most people with a brain that follow the company will come to the same conclusion, because it's just factual stuff. It's just, I mean, you got the evidence right in front of you, right? That's just my opinion. Feel free to make your own opinion and dissent, right? Feel free to dissent from my opinion, but I mean, it's just very simple to me, simple as it can get. Talking about the video, FSHD research, Bionano's whole optical genome mapping. This is good to see. It's marketing. You love to see more videos, publications, articles, Sapphire adoptions, things like we talked about yesterday happen. It makes you very confident. Also, I wanted to remind, obviously, as we said earlier, we got this event coming up. Only good things are happening, man. Sapphire adoption, from what we can tell, it's only going to, I mean, this is why we're here. We're here for stuff like this, for new coverage of our system and our business. They're doing it, and I love to see the management doing this and effectuating what they've been saying they're going to do. Hopefully, we're going to get 10,000 Sapphire adoptions as well, or units, machines installed, I should say. The BMFC Leukemia Symposium, this is going to be happening September 16th. I'm excited for that. Again, great things are happening. Absolutely great things are happening. And this right here, this is likely several Sapphire adoptions, and this looks great. This gets me very excited. Similarly to the Wickham's Sapphire adoption, if you remember that was another Chinese institution adopting us in Q2, and they are going to be, and remember, that wasn't just an adoption, that was a, quote, strategic partnership to buy sapphires, most likely. They didn't specifically say it's going to be several sapphires, but I mean, we can connect the dots, right? We can extrapolate a little bit and put the pieces together. And this thing looks great. It looks absolutely great. Now, talking about the price today, we're up like 3% today, 3.34%. And I mean, honestly, we actually underperformed. Actually, believe it or not, we underperformed in a pretty big way too. I mean, we're up 3%. You can't complain. But look at this. I mean, everything. I mean, our biggest three peers, Microvision, Nanodimension, and Gevo, all up above 5%. That is interesting. However, you can't complain. Now, talking about the technicals, it's still not looking amazing. It's still, I mean, I love that we closed above 550. I absolutely love it. But we've still got some problems. We're approaching our major resistance levels, which is going to be in the 570 to 580 area. We've got a ton of moving averages there. And I just wanted to remind everybody, the technicals, although the technicals don't look amazing here, if high growth continues to go up, we're going to break all of these resistances. And also, it's my opinion that we're going to be seeing the next 2 decades. It's my opinion that we're going to be seeing a chart pattern that is something like this. Like, I don't know where we are right now. I don't know if we're right here, or even right here. I don't know, but it's my opinion that I think we're going to do something like this, chart pattern wise, over the next decade and 2 decades. This is a luminous chart from 1990. Or from 2000. So that's why I'm holding. I'm not holding for the technicals. I'm holding for the company and the Sapphire adoptions. Good luck predicting when the market is going to price those things in. Good luck, man. It's my opinion that long-term hodlers and in the long run, they're going to make more money. That's what I think. Feel free to check out newsweed.com and the YouTube channel Newsweed. The link in the description to both of those. Thank you so much. This is Not Financial Advice. I will see y'all in the next one.